Welcome back. You're watching the ET Money Show with me, Kavita Thapliyal, and we're in the last leg of the show. There are a plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through all of this? We are joined by Rishi Mehra, CEO of Vishfin. Rishi, welcome to the show. And also, if the viewers want to send us your queries, your portfolio queries, you can WhatsApp your queries to us on 865-797-4571, or you can email us your queries on the money show at etnow.tv. So, Rishi, let's begin with our first caller, which is Mr. S.R. Hota. He's on phone line with us. Mr. Hota, good evening. Where are you calling from, sir?
Yeah, I'm calling from Bhubaneswar.
Bhubaneswar. All right, sir. What's the question?
I am just retired and I am a high risk investor. My total, I have 4 funds in my total cost is around 1 CR. The other 3 funds are tax small cap, Vijay mid cap, and Parak Parik flexi cap.
Okay, I don't think I have those names. So you are retired, sir. Let me just come again. Are you a retired individual?
Yeah.
Okay, so you have invested in Axis Focus 25 and you have invested 25 lakh rupees lump sum.
And the current, not lump sum SIP, the current purpose is.
No, Rishi, were you able to hear that?
No, I can't.
All right, so let's just answer what we have, the query that's sent to us. Later on, maybe we can connect and answer him back. So 25 lakh in Axis Focus 25. Now he wants to switch to the other fund, and also he's a retired individual. I really want more details from him, but then we are not able to hear what he's trying to explain. So what should be the strategy?
See, I think he's right. He's just looked upon the last 1 year returns of Axis and he wants to move. What I would say is, because he's invested an amount and is a retired person, I would want him to split between 2, HDFC top 30 and ICICI top focus fund. Why I'm saying this is because he's particularly selected a category, and that's where I want him to remain with the information that I have across, to split in between 2, and that'll do better because both these schemes are doing much better in the last 1 year of what he has already right now.
So you want this amount to be split up into 2 in which funds?
HDFC top 30 and ICICI top focus fund.
And why not Axis Focus 25?
There has been some from last 1 year. It's not giving those returns as a benchmark against the focus funds, etc. So as he is, I think, also research and figure that out, and so I would want him to switch. And he's at age where I don't want him to keep investing in one, and if the fund is not giving returns in last 1 year when the others are giving surplus returns of about 20%, there is something that he needs to switch across.
Also, I think, Rishi, we have limited amount of information. He's a retired individual and I don't know how aggressive he can go in equity. Mr. Hota, are you there on phone line with me?
Yeah, I am on the line.
Perfect. I think now I can hear you clearly. So can you please repeat your question? So Rishi has answered where should you split this money, right? Into 2 funds.
Yeah.
He's given you the recommendation. Now I want to understand what's the purpose of this amount. Do you want it to be there invested for how long?
I can continue it for next 10 years. I don't need this fund.
Okay, perfect. 10 years. Okay, rest, what were the funds that we were talking about earlier?
I have another 3 funds, tax small cap, ETIM mid cap, and Parak Parik flexi cap. And I am satisfied with the.
You are satisfied with the return you're getting. Okay, so the query was only for Axis Focus 25 and I think you've understood it. If in case you've missed the name of the funds, you can watch the show on our channel's YouTube. Thank you so much, Mr. Hota. Next up, do I have Ankit on phone line with me? Or Ankit? All right, Ankit's question is an email actually. So he wants to invest in small cap space and he's confused between SBI small cap or Nippon India small cap.
Yeah. So if it is just the selection between the 2, I would suggest him Nippon. There has been consistent return from Nippon, which has been much higher than the SBI. I mean, not much higher, but a percentage higher, and which impacts a lot. It's more diversified and a little better track record across on that. Has a larger AUM. So, if you compare Apple to Apple, I would suggest him to go for Nippon.
All right. Now tell me something. Under what condition and scenarios you should be investing in a small cap? I mean, small cap really sounds aggressive and high risk, high return, but then is it suitable for every investor?
No, it's not. It can be invested if it is you're taking 3 or 4 funds. One can be small cap because it is the fund which will give you an extra returns across on that. But investing everything in a small cap is not the right idea. But if it is between the 3 or 4 funds that you have, and you are investing in more than 7 to 10 years, it'll give you better returns than the other peers that are available across for a person.
Rishi, if we already have a multi-cap in a portfolio, we have a flexi-cap in a portfolio, still then we should have a small cap fund separately?
Small caps sometimes are aggressive in those segments, and when you play over 10 years, they have certain industry or hold on them. When they become a winner, the returns are much higher, for that period of time. Because once you are investing for a 10 years period, and there are some small caps which a flexi cap will not take or indulge in. So if you have 3 or 4 of them, you should go for a small cap. Yeah.
One strategize booking profit in a small cap fund if it's not performing right now.
I didn't get you for that. Yeah.
So now if at all one wants to book profit in a small cap fund, which fund, what funds would those be where you can book your profit, a small cap fund, and what should be the strategy in booking profit? Or just coming out of a fund or exiting a fund?
Yeah. So the strategy, in coming out of a fund is if it's in a constant year or so, it is not giving returns, in constant to what the others are giving in the same category. Secondly, if you see a certain segment or business life cycles becoming very different, there's a slowness of economy and stuff like that, or particular segments are coming in, then you should quit the fund. Small cap funds, typically when the economy is behaving not that great, not growing, do not give returns, and they're the first one to get affected at that period of time. Or typically, I have another formula. If it is somebody is giving you more than 30-35% of returns, it's the time to book profit, because the next 2 years are not going to be that great across.
Let's move on to our next question. Shreya has sent us a query and she's new to mutual funds. She wants to invest maximum 10,000 rupees in equity mutual funds, and the kind of funds she's accumulated in the portfolio are SBI small cap. She has HDFC mid cap opportunities, Nippon India small cap fund, and Tata Digital India fund. And she wants to have a return of almost 15 to 20% over the next 5 to 10 years. And she wants to know if she can hold on to these funds. Now, a return of 15 to 20%, how practical it is?
It's not practical. I think expectation should be around 12%.
Okay.
The best that you can get across is 14%, but expecting more than 12 from a longer period of time, it's not going to work. And if you're going to take risk across on that, it's going to turn negative from across on that point of view. From the funds she had selected, I think I would still go for a Nippon small fund and the HDFC fund. I would want her to say, invest in one large cap fund and one PGIM multi cap fund, which will give her more returns and have a stable. I don't want her to invest in a Tata Digital just because she's new. I don't want her to select something which can give returns and not can't give returns. So that's my idea of selecting a funds for.
So now tell me something. Obviously, a core portfolio is missing, and Shreya is not the only one who's made a portfolio where there are mainly small cap and mid cap, and a theme that's very trendy for now.
Yeah.
What kind of themes or the kind of return chasing funds one should stay away from? And it's very important to have a core portfolio sorted, and then maybe for diversification you can add on such kind of things for flavor. What do you have to say?
Yeah, so my understanding is somebody who comes new into the market in the first 3 years, 4 years, he should not play with theme funds at all, because they will give you returns and they will either corrupt you or they will engage you to do more. Or if they don't give you returns, you stop expecting mutual funds start giving you returns. So the idea is the first 3-4 years you should have the 4 categories of fund with you, which can give you a stable return of 12%. And then once you have more money and you can invest across on that side, select a theme which you think is for the next 3 to 5 years minimum. Once you're selecting a theme, you shouldn't be not looking at it about for 6 months or 12 months, because that's the in thing. Because we saw a lot in 2019, 2020, a lot of people picking up healthcare funds, thinking that that's the future across. They were good, but they will give returns for 12 months to 24 months. But that's what you have to look. When you look into the theme, look for minimum 5 years where that industry is going to be across.
You know, I have to tell you, because we get a lot of queries on Tata Digital Fund. I mean, people are really investing in this fund and they are banking on this particular theme. How do you look at this fund, and especially the kind of theme it has?
If you are a seasoned, you've invested for 7, 8 years, digital and the kind of scheme Tata Digital, it is great and it will do well. But for somebody who's already, has a portfolio and is looking for diversification, I'll still go and say take for it. Anybody who's, as mentioned earlier, who's starting it out or who is near his retirement age, I would not suggest him to do this.
Talk about retirement. So the first caller, Mr. Hota, he was quite an aggressive investor, considering he was retired and he wanted to put that money in equity. So I think that trend is changing. Do you see senior citizens also investing in equity, being more aggressive and having that risk appetite?
Yeah, I see. And I got a line from him. He said, I don't need it for the next 10 years. So I think he has his all other things sorted out for him. And these are idly lying funds. So anybody who has an idle funds lying with him becomes more aggressive, and he's not dependent on this fund for day-to-day activities. And they start chasing returns, because we've seen a great stock market for the last 5, 6 years. And everybody's expectation is getting bigger and, bigger. So I think anything less than 14, 15%, they feel that it's not a great return. But it's not going to happen all their life. Anything above 12% is what people need to adjust and be very, very, in that mode only, because chasing high returns will not get you results across. It's there's a simple rule that you need to play. Sometimes when you're trying to look in the market too much and look to try to change across, also you make mistakes. Have a stable portfolio for 2 to 3 years, expectation on 12 to 13%. If you're better, you'll give 15, 16% returns across, but be stable across, because trying to change, at times you make too many changes, and that law of averages works against you.
Be too greedy and trust the process of compounding. I think that will be all, Rishi. Thank you so much for being a part of this show and helping our viewers plan their finances. And with that, it's a wrap on the show. But then I leave you with our WhatsApp number, which is 865-797-4571, and our email ID, themoneyshow@etnow.tv. This is the space where we are waiting for your queries. Thank you so much for watching. Goodbye.